This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. The final round of Australian tax cuts have now come into effect. But first, the updated factory PMIs for the giant American economy have brought another diverging set. The S&P Global Market One, the internationally benchmarked version, reported a rise based on new order expansion to describe a moderately expanding sector. But the widely watched local version from the ISM reported the opposite, easing new order levels and a contraction in the sector. Take your pick. The recent trends in both are opposite too. It is hard to know what to make of these competing views, and markets seem to have ignored them. In China, the private PMI survey by Caixin was much more upbeat than the official government version. This internationally benchmarked Caixin factory PMI reported that June business conditions improved the most in over 3 years. But it turns out that's not saying a lot. The improvement from May was marginal. But at least it is positive and underpinned by rising new orders. And staying in China, regular listeners will know that we've been watching the Chinese government bond yields falling to record low territory as investors continue to snap up these bonds amid pessimism about the domestic economy. Now their central bank has moved to halt the slide. In Japan, consumer sentiment, which has been quite low for years, improved in June, but not by much and not a meaningful or trend-changing amount. The German consumer inflation rate eased in June to just 2.2%, down from 2.4% in May. On an EU harmonised basis, it fell to 2.5% from 2.8%. Their core inflation rate is a bit higher at 2.9% because the rise in food prices is now very low and the energy prices continue to retreat. They'll be pleased with this progress and will be hoping it will be maintained. The full EU CPI rate will be released tomorrow, and that is expected to come in at 2.5% and a slight reduction from May. In Australia, CoreLogic is reporting that dwelling values rose 0.7% nationally in June from May to be up 8% for the year. The rise is being led by a booming Perth market, up 24% annually, although Brisbane's 16% and Adelaide's rise of 15% are also strong contributors. Sydney's rises are about the average, but it is Melbourne's falls that are offset the big gainers. And staying in Australia, their Stage 3 tax cuts have come into operation. They will benefit about 11 million earners. The plan that has gone into effect was originally proposed by the Morrison government, but the Albanese government modified it so that those earning under $147,000 a year got more, and those earning more than that level had their gains trimmed by half. The US Treasury 10-year yield is now at 4.48% and up 9 basis points to start the Wall Street week. And the price of gold will start today up $3 from yesterday at $2,329 an ounce. And oil prices are up $2 at $83 a barrel in the US, while the international Brent price is now at $86.50 a barrel. And the Kiwi dollar starts today slightly softer from yesterday at just on 60.8 US cents. Against the Aussie was slightly softer too at 91.2 Australian cents. Against the euro we're down 30 basis points at 56.6 euro cents. That all means our trade-weighted index starts today 20 basis points lower at 70.3. And the Bitcoin price starts today at $63,241 and up 2.6% from yesterday. Volatility over the past 24 hours has been modest, though, at just on plus or minus 1.7%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.